Hello there, Dana here with your trading recap for the week of March the 3rd. Today I will demonstrate the bearish engulfing trade strategy that SPY presented this week. SPY, of course, is the S&P 500 ETF. On your screen, you see SPY on the week time frame. You know what that means. Each candlestick represents 1 week of price data. Here we have a signal, and the signal being a 3 week bearish candle. How do you know first that this is a 3 week bearish candle? 3 weeks, one, two, three. It is engulfing because you look at the three candles to the immediate left. And in considering those candles, the high price of our bearish engulfing is higher than the highest price of those three candles, and the low price is lower than the lowest price of those three candles, creating an engulfing candle. How do I know it's a bearish engulfing candle? Well, the closing price of our 3 week bearish engulfing candle is lower than the open price. And you should know from our previous videos how to read these candles. Here's our closing price, and here's the open price. So we have our signal, and importantly, our signal formed at a resistance level here on your screen. You see a resistance level that was formed on the month. Again, take a look at our previous videos to understand how we identify support and resistance using other engulfing candles. So we have a signal. We also need confirmation. For this particular strategy, confirmation would be if the price of SPY opened in between 597.84, which is 50% of our signal, and the lowest price of our signal, which was 582.44. And also 582.44, the low price of our signal is the first target for this strategy. There are other targets, but today we're going to focus on the first target. So now I'm going to drop down to the half day time frame. This is the same data that I showed you on the previous slide, but it is broken out on the half day and not the week, which means each candlestick represents a half day of price data and not a full week. So these small candles would be inside of those weak candles that were on the previous slide. So let's see how the price of SPY opened on the week of March 3rd. We have confirmation. SPY price opened in between 597.84 and 582.44, as we just explained. This strategy is a bearish strategy, which means this signal suggests that the price of SPY will continue to decrease. So you already see the price of SPY is decreasing, decreasing, sideways, decreasing, or retracement. So what this strategy will try to do is take advantage of this room, which is about $15 of price movement. So according to this strategy, when we got confirmation, then you need to select the appropriate strike price. As I always explain, I select a strike which is in between the price of SPY at the open and my initial target. So here, that strike was 592. I selected a put because I utilize a put to take advantage of a potential downward price movement. So that 590 put with the expiration of March 13th, 2025 was selling at an average of $542 per contract. Let me just mention here, the 592 put is not the only put that you could have selected. It really depends on how much money you want to spend, what your approach is, what your strategy is. But for me, I always like to choose a strike that is in between, as I stated, SPY at the open in my initial target. But you see, there were lots of other options here. You could have gotten the 596, 595, 594, all the way down to 580. All of that is in between these two numbers. So you just want to consider that when you're planning the trade. So we're in the trade. Let's see how it unfolded. All right. The rest of the day, the same day, Monday, March the 3rd, you see that we hit our target in one day, which I would tell you is faster than I usually see for this type of strategy that, hey, we take what the market gives us, right? So, according to the strategy, you sell all the contracts, whether you're in one or 10 contracts, you're out because you've reached your first target, or you hang around to your next target if you have clearly defined that target and set your stop losses appropriately. So before this first target, you can do that math. You are in profit over $700 per contract or a return on investment of over 135% before taxes and fees. So again, this is the bearish engulfing strategy, signal, confirmation target. You can identify all of that when the market is closed. You can also identify your strike price and how much you're willing to pay, as well as your expiration dates. The takeaway here is to plan your trade before the market opens. That way, you are not influenced by the over exuberance or the under exuberance of the market on any particular day. I hope this has been helpful to you. Until the next time, take good care. Goodbye.